of focus and sound level before the film begins.
Okay, I am live here. I can't hear anything. Check 1, 2, check. Check 1, 2. The break has been nice. Let's see. Hey, what's going on out there? How y'all doing? How's everybody doing out there? Good to see everybody. I can actually see some comments. Oh, yeah. Save that. Okay, I think I got that all under control. Oh, yeah, baby. What's going on? We had a breakthrough. Thank you. We had a breakthrough on the website, we think, last night. And then this morning, a little bit more confirmation. So seems like things are on track for where they want to go. Okay, so let me just send that out. So we got a lot to talk about today. We have a ton to talk about. I do want to preface this conversation with please follow Trade the Trigger, the handle on not YouTube, on Twitter. So let me see if I can post it in the chat or something. You should be following that. Let's see here, at Trade the Trigger. The reason you should be following that handle is because with me not currently streaming, I've been spending a portion of my time, let me see here, a portion of my time researching every day and giving updates as to where we are in the marketplace. Hey, how you doing, Twitch? Good to see everybody here from Twitch. So the reason I'm saying that to you is because making these posts on our website, and I'm posting links on Twitter directly to those posts so that you can read them and have a firm idea of where we are in the marketplace. So if you're looking for like, hey, why isn't Cap streaming? As a base case, number one, I'm working with developers right now trying to get a website launched, and we're hitting bottlenecks as we try to launch. Each one of these bottlenecks is requiring me to be there and help to get through those bottlenecks because a lot of work that needs to be done for it to be right. And so we should have that squeeze higher. Now, we're going to talk about this squeeze. We're going to talk about what makes this squeeze important. I think I labeled this video Market Crash or Thread the Needle. And this is right now a function of threading the needle. So we're going to talk about threading that needle and escaping a market crash today. We're going to talk about that specifically today. Because the time is running out. I think we've got 3 to 5 sessions of escaping it and 7, it's one more day less though, 6 to 9 sessions for Qs and SPX to escape. So even with that time frame, like that 6 to 9 sessions, 3 to 5 of those will need to be spent with the market squeezing balls off, like ripping for 3 straight days to get to that point of escaping a market crash. Now, we're going to talk today about whenever this happens, if this is it today, if it's today, tomorrow, or next day, when it begins to happen. We're going to talk about the pitfalls of that squeeze and if that squeeze rejects. Because if that squeeze rejects, on the daily trigger and the daily trigger begins to cross the weekly trigger, we are in some deep shit. Like deep. You can forget the correction. You can throw that out the window. You can throw everything out the window. And we will experience some kind of a flash crash. Now, we're not at that point where you can confirm that's going to happen, but it's there. So we're gonna analyze it today. We're gonna take a look at what to look for if it does happen, and with some downside targets, and they're vicious. Those downside targets are not pretty. So we'll look at those downside targets today, and we'll look at what to look for if we do get that crash. Now, there are some mechanics in the background that say that ain't going to happen. If you look at like the 10-year yield is, I believe is at 4.88 today. So if it hits that magic number of 5%, or has a double top up there, you get like 4.88, then you get like 5. Then it rolls. You could see a turn in the marketplace. And the other thing here is that the 10-year is not what you should be watching for the market to go up or down. It is not relevant to whether the market goes up or down. The 10, the 20, and the 30, there is no correlation to the market going up or down, believe it or not. Sometimes it correlates and sometimes it doesn't. One of the best correlations you can look at are the 2 and 3 year. Those are risk-on appetites in the market. They tend to follow the market more closely. Now, the yield curve and the inverted yield curve, that's not actually a good indicator either. And I read a note or an email was passed to me yesterday, and for all the whining and bitching that I see on FinTwit right now, that's whole nother topic. I can't believe some of the shit that I read, the garbage that I read from people on FinTwit about how bad life is, especially people that are fucking millionaires. I'm not going to name names here, but I was passed an email yesterday. I read through it, and it was a millionaire whining. I got no fucking sympathy for a millionaire whining. And he was like a self-aware wolf. I don't know if you know what a self-aware wolf is, but it's when they whine and bitch, or not whine and bitch, when somebody proves their argument that they're trying to make against whatever they're arguing. So the example here is this guy owns a self-storage unit. This guy owns more than one unit. He owns a bunch of self-storage units. And his posit was, well, my occupancy, well, first of all, he was bitching about how bad the economy is, right? And the damage is being done, and everything is horrible, and the market's going to crash because of where we are. And then he was trying to make or justify that rationale, right? We've got 5% on the 10-year, and everything is terrible, and we're gonna get a market crash. And I'm gonna use these reasons for why. And this is the self-aware wolf part. He said, my occupancy rates in my storage units are down to 66% from a high of 86. For any of you that don't know out there, you want about 70%, an average of about 70%, and you're making money. Anything above that, you're making killer money. Now, if things were that bad, he would have an 80 or 90% occupancy rate in his storage unit. What he's talking about is not a sign of damage being done to, or crippling damage being done to people. I need you out there watching to understand that if someone's bitching and whining on FinTwit anywhere, I don't care, Reddit, they're whining on AM radio, they're whining in newspaper articles, whatever garbage you're being fed out there, whining doesn't fucking matter. If you're working, right, 1 job, 2 jobs, if your wife or your husband is working, if you're living in your parents' home in the basement suite, you're still kind of getting by. It's only when you don't get by any longer, where you do declare bankruptcy, where your house is foreclosed on, where they start to take these things from you, that there's actual pain where you lose your job, you're not rehireable because they hire somebody younger. You lose your wife and your dogs, your cat, your kids, and you go sleep in your fucking truck. That's what you do. You sleep in your truck and you try to find work, and your shit either gets sold or it gets put into, guess what? A storage unit. And storage units should be booming right now if the damage has been done. Further on that point, rents should be booming right now if people are actually losing their homes. That's not happening. Rents are coming down. This guy that I just read from this guy that I trust, that I believe this guy. This is like an email exchange, not quite a Twitter post. This is actually a group of rich people that talk to each other. So this guy's like self-aware wolving in my viewpoint here. He's whining because he's not fucking making money. And he's trying to correlate that with the state of the economy. In fact, this guy, if the economy was shit in the bed, would be making a ton of money, specifically through those storage units. So I don't think the damage is done. Another point here would be Bill Ackman, Jamie Dimon, by the way, Jamie Dimon, and Mook Wilson, Mike Wilson, Mick Wilson, we'll call him Mick, and Dimon, all have three different takes on where we are right now. If you listen to the three of them right now speak, they all have different takes. You've got Jamie saying something like, we got to go to 7 basis points. The damage isn't done. You've got Bill Ackman saying, we ain't getting any more rate hikes. We're done. You'll be lucky if we get another 2.5. You got Mike Wilson out there saying, you're fucked. We're going to get stuck in I think it's the exact words he said was purgatory. And we're going to trade sideways and in this range bound, like this 420 to 450, while we wait and see the effects of the rate increases in the Fed. Taken together, those three guys and their statements in the last 2 weeks come back to my take on Jerome Powell's fucking rate decision. And it's bearing itself out there right now with these talking heads. They're not in agreement with Jerome, are they? And they've got their own thoughts on what we're gonna do. You got a couple of these guys. We got one guy on the extreme. You got another guy saying, I don't fucking believe him. Probably for the ulterior motives. He wants to see growth to continue to the upside. But you still have this rate decision, this last rate decision, still is a thorn in my side. And you can see right now on these people that matter to the marketplace that they are arguing about what the Fed is projecting. And funnily enough, I read a USA Today article this morning, and they tried to tone down in the article Jerome saying that he was going to hold and raise for longer into December of 2024. And they tried to downplay that today. In this, there's an article from yesterday where they were trying to downplay that message that Jerome was telegraphing. I urge all of you, if you don't agree with my take on the Jerome rate decision, to go back and watch that video and dissect it. And watch it once, twice, or maybe even 3 times to get exactly what he was saying. And my take on that rate increase was that the banks and people with money and rich people and all these other fucking things, regional banks, are going to throw a fucking hissy fit over what he did with those charts. Because it's bullshit. What he did that day was fucking bullshit. And he had charts that were like 10 years out. You know, it's not his job to do that. All he had to say was higher for longer. No rate increase, higher for longer. Instead, comes out and he starts to show you a bunch of goofy ass shit that has nothing to do with what actually is going to happen. So, and now you're seeing these talking heads come out and they're bewildered by that. In my viewpoint, they're bewildered by what he's saying. Now, if you are a bull, you have something on your side. That is that 10-year yield. It's at 4.88. There should be some kind of an expectation of a roll or break of trend of that yield. So we'll take a look at that right now. So I posted this chart on, I believe, Friday or Sunday or something like that. Posted this chart on the website. And this is where Bill Ackman and Mr. Fink expect us to go, 5%. So they say 5%. What did we hit? We hit 488, not quite 5. So if we do some kind of double top up here, here's your squeeze, by the way. You do some kind of double top and then we send it lower, you're looking for that if you're a bull. You can already see the yield popping down. This should give you the ability to squeeze higher, right? Right there. We might still see another low, though, in the market, right? Squeeze higher, roll down one more time, and then there's your 5% yield that rolls, right? You're going to get people that want to sell this, right? They're selling into it right now at 488. They're likely going to sell this as well. And the other thing I noticed this morning is I'm reading news stories saying, I shit you not. I'm reading news stories saying everybody's running to chase yield on the 10-year right now. And I'm like, as soon as that shit's out in the public, that means they're going to sell into you. So that's some hope for the bull as well, that you're going to get this pressure and break of trend. So if you are a bull, what are you looking for? You're looking for that 10-year trend to break. So there's two things you're looking for here. You're going to be looking for that 5%, and you're going to be looking like you'll make some decent money on a squeeze here and here. But the truth is, you're looking for a break up here. This is what you're looking for, is just a trend break of that 10-year yield. Now, there is something else that's very negative for you as a bull, something that is actually dangerous for you as a bull, and that is that HYG. Now, I want to show you something important here in HYG. HYG price broke above the monthly trigger and held it right here. Boom. This is positive. When HYG is above its monthly trigger, market is stable, even if we have pullbacks. Going on up, everything is honky-dory. Everything is great. We lost the monthly trigger on the 2nd, 2 days ago. I want to mark this for you so that you know where the market became dangerous. I want you to see where the market became dangerous. So on the 2nd of October at 11 a.m., we rejected and broke below the monthly trigger here. This is where the danger comes in. As long as we are below the monthly trigger, the daily, the weekly, and the monthly is crossing here, it can lend itself to a major crash, believe it or not, in the stock market. So let's say you see HYG come up and it gets a rejection in here and starts to bloodbath. This trigger cluster right here can act as very violent for a downside move and risk on the equity market. So I would, if it was me, I would be paying close attention to Qs and S&P 500 if price on HYG comes back up to that 73.04. If there's any rejection up here to the downside, if there's any rejection at 73.34, 73.65. This is a big thing for bears and sellers. As long as price on HYG remains below 73.65, 73.04, we are in a stock market crash warning. That's where we are. If there's rejection here and we continue to go lower, you're going to get a crash. So we need to monitor this HYG in the coming days. By the way, I'm still bullish here if you want to know that we're going up. And I got 300 call spreads for December here. Now we're gonna talk really quick about, go back to that trigger screen. We're gonna talk really quick about that thread in the needle and rejection and what it means. I'm gonna show you some historical examples of what I'm discussing with you today. So we're going to go to a one-day chart on SPX, I guess. It doesn't matter if we go to SPY or SPX for this. We're going to go to a one-day chart, though. Maybe I don't know if this is going to be easier for you to pay attention to, but one of the key things here I want you to see is this. You can see already that this yellow line is making an attempt to cross below the weekly trigger. Okay. See this yellow line right here. If it does cross the weekly trigger and we reject price, we come up here to the weekly, right? And we get that cross and a rejection. This result here is going to be bad. And I ain't talking about going to like 406 or 4005 or anything like that. The end result of this cross specifically here, this yellow and orange cross, leads to an unstable market and true volatility and likely a crash. So I want to show you some examples of this in the past of that cross happening and what happens. And I also want to show you examples of this line getting very close and the market threading the needle to escape the cross. So the yellow comes down and price blasts up quickly, consolidates, and then starts to head higher, gets underneath, and we escape to the upside. Whoop, whoop, and we're out of there. So we don't have a lot of time left. I think we've got 5 to 8 sessions, 9 sessions, 4 sessions for S&P and Qs to do it. So I'm going to show you some examples really quick of us escaping and what happens when we do not. You can see one of those right here. Actually, just this year, you can see one, right? It's one right down here, right? We didn't cross that orange line. We escaped above it and up, and away, and we're out of there, right? I'm going to show you some historical examples here as well. Here's one back here in 2021 and also 2022, right? We slammed down into the weekly. Price didn't break the weekly, but we recovered that yellow line before the yellow line crossed, right? Look what happened here, though, right? So if you look right here, you can see that we got the cross, right? You can see that price bounced. We came back up, and we failed the daily and the weekly. I'm going to warn you here that was the moment that you were given a warning shot across the bow. This cross here was your signal to get the fuck out of the market. You were even given more liquidity to the upside to exit the market. But the key point here is you had the failure and the cross. I want you to see that. The failure and the cross. This was it right here. That was your get the fuck out of the market, right? That was your get the fuck out of the market. So if we're looking at this, where we are right now, these two examples, pay attention. I'm going to mute my camera over here. Hold on. So you can see everything. So if you look at this cross here, right, I want you to use this as an example right there. And then this as an example right there. These are two easy examples. Two easy examples to pay attention to. And specifically, where are we right now? We are either going to be at that slip right out and we're out of here, or we're going to be like this example right here, where we rip some faces off and we reject immediately to the downside, right? And that brings up 403.64. And you may not, though, but you might get one more opportunity to get out But the truth is that the market starts to give itself up here. Now, you might think, hey, Cap, you're looking at only 2 examples. Show us some more. You got one right there, and you got one right there. Cap, why don't you show us some more? So I will. And you can see them right here, right? No cross of the yellow and orange. No cross of yellow and orange. Even this deep one right here, yellow didn't even follow, did it? Here, yellow didn't follow for orange. Yellow didn't follow for orange. But what happened back here? When you got the cross of yellow and orange, what happened? Fucking bloodbath. Boom, right? See ya to the downside. No cross of yellow and orange, no cross of yellow and orange, no cross of yellow and orange. What do you have right here? You got a cross of yellow and orange. When that happens, what happens? Fucking crash. Bam, to the downside. Bloodbath right there. Nasty, vicious. See you later. That's 215. This was 280. That's a third of the market right there. Gone. You see what I'm saying here? So we can look at further examples of this in the past as well. There's the first cross right here. Here's the second cross right there. Bloodbath to the downside. This is 2016. No cross right here. And any kind of blood here, though, we still had major blood and a screamer to the upside. Right? That actually is that recovery squeeze, right? That recovery squeeze. No cross right here, big recovery squeeze. No cross right here, big recovery. Right? Cross right here, what took place? This is 2011, right? This is actually very similar to where we are in the market right now. This 2011 is a very similar time period in what's happening in our stock in our market. But look at that. Bloodbath straight down to the depths of hell, right? We were trading 108.71, and we traded 86.90, so roughly 20-30% of the stock market. So if we come back to where we are right now, and this actually works well going back to 1896. So what does that mean for us right now is this is SPY right now, right? What can we posit here? We can posit that you'll likely see a squeeze. You're likely going to see a squeeze. But it does matter what happens here, doesn't it? If there's a rejection and we slam down into this 403, let's measure that and find out how much that is. Because we know that we go down 20, 30, 40, 50%. Let's take the top here and go straight down to here. That's only 11.2%. That ain't shit. That ain't shit. That ain't even 20%. What's that right there? That's 26%. That's 20%. And that's 332.71. Where is the JPM caller for Q4? The bottom side, I believe, is 3,500-ish, right? Somewhere in there. So the JPM caller is telling you for Q4, this is possible. Right? So they've got a hedge. Uh-oh. They got some weirdness going on right now. So there is a possibility in Q4 that we can actually reject here, cause market panic, get underneath that 403, and start bloodbathing it. Right? So you have your warning. You have your warning right now from me, right? You've had them from other people, but you have them from me saying to you that if at any point, if there's a rejection above, if you get a rejection above here, hold on here, right there. If you get a rejection of either of these two numbers, to buckle the fuck up would be the best way I could say it. So if either this right here or this right here, anything like that, and you likely not only see that 403.64, but you likely introduce a possibility of continued downside to that 350 mark into end of Q4 or Q1 of 2024. You actually create panic in the marketplace, and it's all over. So this is what we want to be paying attention to here in the coming days. You don't want what you do want to see, though, is if you're a buyer at least, is you don't want to see that, do you? You don't want to see this cross of the yellow line below the orange, right? You don't want to see this continuation down here, right? Cross up above that orange line. We reject into the downside. What you need to be seeing is squeezing, small consolidation, and start squeezing higher to the upside and reclaim. So if you're a bull, what are you looking for here? 435.87 is what you're looking for. 435.87 is actually what you are looking for. 435.87. This is your last chance, bull chance, for not only trend, but let's be honest. It's not forget about giving up trend. You're talking about, not just breaking trend either, but opening the door to a market crash to the downside. So, in the background, I will be watching that cross. So every morning, every night, I look at that yellow line. I actually look at it every day, and I go, is that thing still coming down? And it is. It's coming down. It wasn't, but it started to. It started to turn to the downside. And once it began its downward descent, I'm like, shit, this is bad. Not confirmed yet, but it's bad. And so right now, it's still coming down. Right now, it's still dropping at a high vertical downward slope towards that weekly trigger. So if that cross happens and price reverses to the downside, I'll post something on at Captain's Alpha or Trade the Trigger or all three handles on Twitter, and I'll say something in the Discord, and you'll have a video. If this happens in the overnight, I'll come on live in the middle of the night. If it's like 2, 3 in the morning and that cross takes place, 4 o'clock in the morning, I don't care. If that cross happens, you will know about it from me because that is a really bad. It's like it's a fundamental change to the market. So I know that you guys think it's bad right now, but it's not. If you want to see bad, if you want to see a crash again, like you did in 2020 and like you did in 2022, we're setting up for it right now. It's not confirmed yet, but it's there. It's looming in the background. Well, all right, so someone's asking about jobs numbers. And let's go back to that Jamie Dimon thing and that Bill Ackman and Mick Wilson. Let's talk about that really quick because someone's asking about it. And I brought this up directly after. Let's look at two other things. Let's look at the JPM caller. Hold on a second here. We got a bunch to look at today because I haven't been on, right? So first thing we got to look at is this is the history of the JPM caller. And what I want for you to pay attention to is specifically this one right here. This is Q2 of 2022. When this caller came out, we sold down below the middle strike almost immediately. And then we actually blasted down and into below the lower strike on that collar, right? And it was fast, right? Bam, 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 get down here, bam, bam, bam. We got a lot of work to do to the downside, right? And let's look at the current collar here. So we're kind of at this place where, if you don't save your own ass here, right? If you don't save your own ass down here, if we start to reject and sell in the beginning of this quarter, like we try this shit up here, right? We get up to that weekly or that daily, and at any point we begin to reject, right? We start ripping faces to the downside. We get below 4,000. 405, 403 on the monthly trigger. It looks pretty fucking nasty, right? It starts opening the door to 34.20 in the end of the quarter. That's how fast that happens. And you know what happens if we blast down there, right? If you lose that confidence in the marketplace, if we begin to reject, blast down below, and do this kind of nonsense down here, right? And we get to the end of that quarter and we're below 350, what do you think JPM is going to do? They're going to fucking lower this shit. They're going to do something like this, right? And then 2,800 becomes a question mark. Why 2,800? I'll show you that right now. You got your 403 right here, right? 403.64. If in Q4 we get the major rejection, the bloodbath down below, we get underneath the Q4 collar. What are you looking for in Q1? Or excuse me, the end of Q2. Right down here. It's right there. This is the purple. 332.71 on SPOOs. Let's make this SPX so we can look at that collar again. And what does it say here? Let's take a look at what this says right here. Let's take a close look together as a team. What does that little purple thing say down there? It says 3470.87. 3478.87. Shocker, right? If you were making a collar, a bearish seagull against the market for Q4, where would your lowest strike be? Right down there. So you got 3470, right? That matches up magically to the bear case, the rejection case below in that tag down there. And what about that 2,800 number that I gave you? If you look down here, what do we have down here? We got 2814. So if I was JPM and we broke down to that 350, where would my Q1 bottom target be? 2814. Likely this will be about 21 or 28. Maybe this is 2,900 by the time we get to them making that Q1 projection to the downside. But that is on tap. What's below that? Right here, 2059. 2059 is next target to the downside. This is an extreme low right now. 2095. That would likely be about, by the time we got here, would likely be 2,200. About 2,200 by the time we got there. So the market is set up for this to happen, right? The market is currently set up for that to, one second here, to happen. The next thing we're going to look at here is cycles. We're going to take a look at cycles, and then we're going to take a look at the unemployment rates and all the other shit that you want to be asking questions about. So we're still on trend here, right? Still on trend. I want you to pay attention to a couple things here. Whenever you ask me publicly, you say to me, hey, Cap, when do you place your bull trades? When do you do your market breadth indicator trades? And why aren't they frequent? And how many opportunities do you get? I tell you, you get somewhere between 9 and 13 chances every year. Well, we don't have that, do we? We got 1, 2, 3, and now we've got 4. So if you're a bull out there and you're always looking for that perfect trade and you're looking for that market breadth trade, right there's one, right there's one, right there's one, right there is kind of a baby one, but right now we've got a big one. Right now there's a big one. These are the moments where they send out Dan Niles. Oh, hold on. These are the moments where they send out Dan Niles, and Dan Niles will say something to you like, we're extremely bearish. We think the market's going to crash, but we're going to buy the oversold bounce. So if you're a bull out there, this is actually the time for you to put risk on. This is the moment that you put risk on. Now, you might be like, what if it goes against me, Cap? You start to roll down, right? That's why you have stops, right? You don't buy calls here, do you? You don't buy calls here, do you? You don't get that much. You get it down here when it's mostly bearish, when people are bitching and whining and crying, and rich people, millionaires are all crying, and, you know, all the bulls are on fucking FinTwit, and they're fucking whining about how they can't afford shit and all this other shit. You got diarrhea being released, just pure fucking fear diarrhea. It's always when you're here, 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 and now right here. So this is the actual place for you to put some risk on in the marketplace. Now, I'll give you something. If it does reject and we start going down, you have some stops. But this is the place. It's not up here. You're not buying calls up here. You're not buying calls up here, right? This is all when you time it. You're like, oh, I'm going to buy them up here. Rolls back down on you. Now you're fucked up. And now you're hoping and begging that we go up there, right? You didn't put enough time on your call spreads. So this is the time. This is the place that you put the risk on the marketplace. No matter what they're saying to you publicly, no matter what you read on FinTwit, no matter what some asshole emails you and says that he's losing millions of dollars on his storage units, no matter what CNBC tells you, Bloomberg tells you, no matter what USA Today tells you about how everybody's fucking fleeing to fucking make money on 5% fucking yields, or I can make 5% in a savings account. You literally are waiting for these moments in the marketplace to risk money. And I've discussed this in the past. Whenever we have breadth near capitulation phase, this is the moment where I've expressed this to you in the past multiple times. I've said to people, you're not going to want to take these trades with me. You're not going to want to put this risk on. You're not going to want to do this. I assure you, when we are there, you're going to not take the trade with me. The reason you're not going to take the trade with me is because of the cacophony of bearishness in the marketplace. So we are at that moment right now. I know that if you're watching my show right now, that you feel this out there. You can't deny it. I know that you are. I know that you're feeling it. Just doom and gloom. I know that if you're a bear or a seller, you are as excited and as frothy as you can be with a crash. Now, for myself, I'm putting risk on right now. I'm looking at yesterday, and I'm like, yeah, we might go down a little bit more. We might go up and then roll down and tag like 413. But I have to pick my poison, right? Is it 420? Is it 413? Do we not ever come back to tag the 413? Do I put enough time on them, 1 month, 2 months, or 3 months to get that payday? But this is most certainly not where I don't put risk on. I mean, I'll day trade it, but this is not the place where I'm buying the market here. I have posts on, I don't know, I was deleting a bunch of my Twitter shit. I was trying to delete all my Twitter shit from day one, but I remember this morning I had a video and I had a post. It was like 6 or 7 in the morning. I had a post on FinTwit. And I was like, everybody was screaming market crash that morning. I think it was October 11th or 12th. And I was like, buy the fuck out of this right now. Buy it all. And I was the laughing stock of FinTwit. And right now, I bet that on this date, on March 13th, you heard the same shit. And then back here, today, you're hearing the same fucking diarrhea. Now, can they be right? That we're going to reject and roll down? Like, hey, we're going to reject this. Start bloodbath in it. Maybe they're right, but I'll have stops here. I'll look for this rejection. I'll manage the trade. If we get the big roll of the daily trigger over the weekly trigger, I'll be watching for that to manage the risk that I'm putting on the marketplace. But this is the fucking place. And if we do recover here, I'm going to tell you the next part that happens. So if we recover here, if there is a recovery, and we begin to go up, I'm going to tell you exactly what fucking happens. 3/4 of you are buying calls right there. And 3/4 of you are the most bullish that you could be. And a bunch of you bears are selling your shorts up there rather than getting short. Does that make sense to you? So this is the place to get bullish. This is the place to get bearish. Get bearish, get bearish, get bearish, get bullish, get bullish, get bullish. Now, if we have a fundamental shift in the marketplace, we reject and we go down, fuck it. We're all bears at that point, right? We got a trend change. Until this trend changes to the upside, we will trade that shit to the depths of hell. Does that make sense to you? So if we get a major trend change, we will take that trade. We will become bears. Bears. But until then, we ain't there yet. This is the place for you to get pretty fucking bullish. Pretty fucking bullish. And you tactfully know that you can't trade below. You could probably trade 413, but somewhere like on SPY be 413. But you can basically, you can deal with 420 and you can deal with 413 as long as we bounce and keep going higher and the daily trigger doesn't reject us. And we're going to start going up. And in 3 months, you're going to look back and you're going to say, I'm fucking rich. That's what you're going to say. And if we reject and break down, you're going to lick your wounds. You're not going to take a heavy loss. And you're going to switch to bearish. And you're going to look for entry, the next one that comes, right? You're going to be, hell yeah, I'm selling this right here, Cappy. Right? And you're selling that down and selling that down and selling that down. Now we're going to look at two parts of the cycles. PMO is not showing a reversal yet, so that's not bullish. That shows that we have to be cautious. There is a little bit of a turnaround, though, here in PMO, or PPO, excuse me. PPO is turning that dark purple, and it's telling you that there's a high chance of a major squeeze to the upside. Hasn't happened yet, but it is showing you you're not getting light purple bars down here. You're getting these dark ones, and you're getting declining bars. See the declining bars right here telling you expect a squeeze. Another thing for a bull is that we're at 5.3% bullishness. We're at 5.8% on the total bullishness right here and right here. When we get this sold, become this oversold, we always get a bounce, even if we're in a crash. So even if we're in a crash, we still get oversold bounces. We still get oversold squeezes. And this here is telling you to expect one. And if you don't think so, if you're like, oh, no, Cap, that doesn't happen, I don't know what you're talking about, Cappy. I'm going to firmly disagree with you. Firmly. And I'm going to show you where it's happened in the past. Here's a big bad boy right here. Big, giant bad boy right here. And you can see oversold bounces, right? This is 2020. Giant oversold bounce. Here, we'll see if we can look at this on a more pretty, a fun time chart. Where are we at here? I gotta slide back a whole shit ton to show these things. Hold on, it doesn't want to come with me to the downside. Right here. Even in this crash here, we had major squeezes, like rip faces off, squeezing, right? Here's another one right here. Big giant squeeze right there, and then the bottom right down there, right? 3 giant squeezes in SPOOs as we capitulated at one of the fastest paces in history, right? We still had oversold bounces here. So you will have time, is my point, if we do break to the downside. If you think, hey, Cap, we're still going to crash, I'm not buying this, you're still going to have an opportunity on a trend change to the downside. If you have some kind of a trend change here, you break down, you're still going to get the chance to be a seller here. Does that make sense? You're still going to get that squeeze up, still going to be able to sell this down, get down below that 3,500 to the downside. And this market breadth indicator is telling you expect a squeeze. Expect a squeeze. PPOs are telling you expect a squeeze. PMOs are telling you, yeah, even if we get that squeeze, there's no guarantee of a reversal to the upside. So for right now, I'm going to go with we're squeezing. In the next coming sessions, the next one today to the next 3 to 5 sessions or so, you're going to see a squeeze. We're now going to switch over to what was being asked. Oh, wait a minute. No, that's not the right one. Hold on one second here. We're going to talk about when does everything matter? So we can get to a weekly chart here. When does everything begin to matter? This is SPX. This might be a little bit sloppy here. Let's take a look at SPX. So here's SPX. What is a bear looking for? What are the banks looking for, right? You got the Fed chair saying, we ain't going to be at 6% unemployment. This is December of 2024. And that's showing 5.53% unemployment in December 2024. If you think we're at 5 or 6% unemployment in 2024 in December, he's talking about holding rates up at 5%, 5.5%, maybe 1 or 2 rate increases. You got Jamie Dimon out there saying we're going to 7 basis points. You're telling me if we have unemployment at 6% in December of 2024, that Jerome's going to be at 7 basis points and the market's going to be up? I'm going to tell you, fuck no, it isn't. So I think Jamie Dimon or Jamie Dimon is lying to you. I think Jamie Dimon is trying to say to you, we ain't going to get there. I think he's going to say to you, I'm trying to make some money here in the downside move. All I care about is that right now. I'm going to threaten you with 7 basis points. You got Mike Wilson probably in a trade right now saying we're going to be stuck in that hell, right? Give me 4,000. He's probably in a short right now for 4,000. Then you got Bill Ackman out there, and Bill Ackman's looking at this stuff, more than likely looking at this stuff saying, there ain't no fucking way we're going up there. There ain't no fucking way we're going to have 6% unemployment. There ain't no way that we're going to have rates just ripping face off. There ain't no way that we're going to have inflation coming down, and we're going to start to roll. Now, if we get that roll, right, that rates roll, and you get the inflation still coming down, and you get unemployment coming up, and you get rates coming up, this is the trifecta for the market roll, or the quadfecta for the market roll. So now what it really means is a matter of timing. Does it happen now? Do we start bloodbathing, rejecting up here, right, and start making that roll down until he's forced to cut rates? Or is it a little bit farther out in time? That's what Mike Wilson is saying, right? A little bit farther out in time before we actually make that roll to the downside? Or is it Bill Ackman saying, we're never going to get there. Let's go back to that crash in the springtime, in the summer of 2024. So no one's really believing, none of these guys are actually believing that we make it into December 2024, except for maybe Diamond saying 7% or 7 basis points on rates. But we already know they're probably lying, right? We already know that your unemployment at 7%, 6%. You're telling me they're going to be adding rates at 6 or 7% unemployment. You're out of your fucking skull. If you have 7 basis points and inflation is bottoming out at 2%, you're out of your fucking skull if you think we're going any higher. So, from my perspective, I think that the Fed is being called out. I think the Fed is being told by these big talking heads, we don't believe that you're going there. Or Diamond saying 7 basis points is maybe he's just saying, well, fuck it, let's do it. If you're going to go to fucking holding rates up in December 2020, fuck it, let's make it 7 right now. Let's make it 7 by spring or summer. Let's really put the fucking hurt on on this market. So maybe he's got some joy in that. I can get behind that. I can get behind Jamie saying 7 basis points. Do I think you get 7 basis points in December of 2024? Fuck no. Do I think if we went to 7 basis points in the spring that the market's going to react well to that? Fuck no. You're going to roll this shit to the depths of hell. Absolutely. Do I think that the consumer is hurt yet? Fuck no. But do I think that they'll raise and hold until they do really get the pain where they start losing their homes? Where they start to lose their wives, their kids, their dogs? Yes. Do I think it's right now? No. What did Jerome have to say? Higher for longer. That's all he had to say. That's all he had to say. And the funny part is if he had just said that, he could have went to 7 basis points. It opens the door to that. Right now he's like, we're gonna raise 0.25 or 2.5 and 2.5 again, possible, and hold into December of 2024. And I'm like, nothing in the data is suggesting that you're going to be doing that in December of 2024. The data is suggesting that you're going to get control of inflation and you're going to get unemployment and jobs going away between now and December 2024. And these talking heads are saying the same shit basically. We don't believe you. And furthermore, I'm Jimmy Diamond. I'm going to call you out on it and say, fuck it, let's go to 7 then. Let's make it happen. Let's get this a minute to load up. There we go. So you guys have this up on the screen for you right here. You guys want to see that how do you guys like that Weeble chart? You guys want to see it? I posted this chart for you on I want to say there. I posted this chart for you on the website. You can see the rejection here to the downside, right? Slamming down. Sellers want to get underneath this hourly trigger to the downside and trade. And there's a couple gaps down below here that need closed on SPX. A couple hidden gaps. We can take a look at that if you want to see those gaps. Let me show them to you here. Just so you can see price right here. There's a little gap right. There's the first one right there. We closed that one. That gap has been closed. And there's a secret one down here. There's not a secret, but there is one right down here. There's one. That's 413 and 41465. And there's a secret one down here. This one, this little tiny one, that little gap down there is at 4085 on SPX. So if you're wondering why or how we get there, if you're wondering how do we get down there, there's the 5-minute chart again, or why we would go down there. It's right down there. There's 409. There's S3 for you. S2 right up here, S1. And that would be that rejection, stay underneath the hourly trigger, and start heading to the downside, right? On the upside, if you are a bear, you are looking for the rejection right here. As long as price is above the hourly trigger, you're going to be looking for the rejection on the weekly trigger and also on that daily trigger. Big rejection on any kind of squeeze to the upside. Currently, price is sitting above or was sitting above the hourly trigger. Let me just check it real quick and make sure that we're still above it. Yeah, it's parked right on it right now. So this is accurate right here. So price is parked on the hourly trigger. And the pivot, hold on here. And you can see it right here. If I go to the 1 minute chart, just so you can see it here, trying to smash it down into that hourly trigger. You can see it right there. There's the H. Your 30-minute trigger is at 422.46 down here. 442.46 to the downside. Still no cross of the 1 and 5 minute here, so still bullish. We'll see if this can hold here. See you on there. Now, if you're having trouble accessing the tool, we're going to go over that in stream, how to access it. So you shouldn't, but well, I'll tell you this. If you're familiar, there you go. If you're familiar with TradingView, you go to the indicators button in the top middle, say indicators on it. You click on it, and a new tab will pop up that says invite only scripts. You're going to get access to 3 scripts, to velocity and triggers. You'll get 2 trigger scripts, one with channels and one without. If you don't like channels, that's the one that you use. If you can even hide and unhide with and without channels, so you could put all 3 indicators up. I also want you to know that
quickly pairing some of these gains here, still up 0.4% on the session. Alongside that, some strength in the dollar. It's still down 0.3% though. And so again, no news catalyst for this particular move. They're just keeping our eyes on the wires here.
If you're familiar, it's easy. You just go to the indicator button, you click on it, you go down, you'll see the invite only scripts. You hit all 3, and then you can use a it's like an I button that's on the tools, and you can just click them to leave the triggers up but hide the channels. So you're going to get access to all 3 to start. There's a couple of caveats here. So if you have a free account, I want you to know that your data will be delayed. If you have a paid account and do not pay for data, you still get real-time data except for a couple tickers, but it's not complete data. It's only pulling from, I think, the CBO or something like that. So, but you can then buy data if you like. But there's no requirement that you buy data is my point. If you use a free account, you have a limitation on how many indicators you can use. So I think it's 2 or 3. So this will fit the bill for you to have a free account and use the tools, although you'll have delayed data. If you're looking for a discount, you're like, hey, Cap, I don't want to pay $7 a month or $8 a month to TradingView. You can always stay with the delayed data. You just can't day trade with it. If you want to get real-time data, I would not personally buy real-time data as a package. I would just pay for the TradingView, whatever TradingView package you like. And then on top of that, I would say to you that you can usually get that signing up for a year. You can usually get a discount of about 40 to 60%. So if you don't have that code, I'll try to post that in the stream today at some point, a code for you to get a discount of 40 to 60%. I've got an affiliate code, but it doesn't matter. I don't use it on this dev account, so I don't try to make any money off you. I'm not going to try to give you a discount code that gives me any money. So I want you to first realize that whatever code I give to you I'm not making any money off it. $0 fucking dollars. So I'll get that to you here in just a few moments. So and still inputting names. If you're new to TradingView, you don't have any experience and you're a moderator on YouTube and Twitch, hang tight. I'll get you access. Sign up for a free TradingView account. Don't pay anything yet. Find out what your username is. Reply to me in that Discord, and I will walk you through what to do, how to set up your TradingView so it looks beautiful and sexy. I'll walk through how to get the indicator, how to find it on your account, all that kind of stuff. I'll do it today before I leave. I'll go through how I set up my TradingView. so that you can set your trading view up just like mine, because it does have an impact. Whether you're showing extended hours or not has an impact. There's a bunch of like settings that you should set if you want to follow along exactly with what I'm doing. As a matter of fact, if you're a longtime TradingView user, maybe you're just interested in finding out how I set up my TradingView. So we'll go through how I set it up. And so if you're new to TradingView, you don't have an account, just sign up for an account, get your username posted inside that Discord channel. Give me one quick second here. I'm going to keep adding. People right now. So just give me a few moments. My dog was like, "Well, I'm not stupid enough to get lured away and killed by the coyotes, but I want to play with the coyotes." So he'd play with the coyotes. He'd like run outside of my fencing, and he'd run down this mountain bike trail, and he'd fuck around with the coyotes, and the coyote would be like, "Dude, just come over the hill. Just come over the hill, dude." And my dog would be like, "Nah, I'm good. Okay, now I'm faking you. Let's go back to the house." So that's what they would do, like this big thing. And I would watch the entire experience because I'm trying to teach the dog not to go with the coyotes to die, and also to keep the coyotes away from my kids. So this a couple days ago, I think it was like 4 days ago, dog's whiling, dog's going crazy. And as the dog's going crazy, he's barking at a woodpile. Lo and behold, hidden in the woodpile was some goddamn cats, like real young cats. At the time, I was like, these things are maybe a week old, 2 weeks. A whole slew of them. I thought there was 3. There wound up being 4. So I pulled these goddamn cats out of my wood pile. And I think that they're 2 weeks old. No, let's just drop the hammer on that. At this point, I think we figured out they're 2 weeks old, but they don't have a mom. The mom, actually, I brought them a blanket and left them outside for a full day in case the mom came back. She never came back. So she never came back a 24-hour period. I like rushed down to a feed store, grabbed a bunch of baby milk and shit. And I took the cats inside my home. So they've been sitting here now for the past 3 or 4 days. Scrum Devil 7. Scrum Devil 7, I don't see him. Career low, I don't see you on here, man. Oh, man, wait, you might be here. I'm on access granted. So we took these kids, we took these cats inside, these baby kittens. And I have no experience with that. I'm getting you in career low right now. I don't have any experience with baby cats. And I'm supposed to be a big, mean old man. I'm supposed to be the bad guy. And then I started watching a bunch of videos on what do you do if the mother's gone and for a kitten. And it's wild. Like, I gotta massage their butthole so they poop. I gotta massage their taints or tang, I guess, their penises and vaginas to pee. It's horrible. You gotta like rub it with a paper towel, and then they start peeing and pooping. And then I gotta like bottle feed them one at a time. And they were dying and starving and all this shit. So I like started really slow. Then I started increasing the amount. It's like day 3 or 4 right now. What's up, buddy? Now, my dog didn't kill these goddamn kittens. So I'm very impressed. This border collie or the Aussie Shepherd, he should have torn these things to shreds. And he had a soft heart for babies. So this dog, this Aussie Shepherd, man, I'm like, you want some steak? What do you want? You want a hamburger? Steak? Chicken? What do you want? So I'm like cooking up meals for the Aussie Shepherd. The kittens, it's out of control. These cats are like, I want fed every 3 hours. I want 4 ounces of milk. I want to chug it. Like, just pounding fucking milk. Then they don't want to take a shit or a piss. So like one of them, I'm rubbing his butthole and he's like shitting out like a log, like the size of his leg. I'm like, dude, you got to shit, man. So I'm like doing all that stuff for the kittens. And I got to get rid of these goddamn kittens. So I tell the young kids, well, so now I got this goddamn fucking kittens, right? And we're trying to take care of these kittens. And I said I had 4, right? I got 5. Is it 4? 5. 4 or 5, something like that. And so I tell my kids, I'm like, here's the deal. Split switch, you're in. NJF22. 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 Oh, yeah, baby, you're next. So I now have these goddamn kittens. And I'm like, I got goddamn kittens. And I'm not even religious. God dang kittens. I guess I'm religious now with kittens. So I got these kittens, and I'm like I'm not a good dad. Like, I'm talking to my daughters, and I'm like, here's the deal. I'm like, I looked at a bunch of ads for free kittens, and everyone wants to get paid for them. They're asking for money for like shots and all this other crap, like $150 for a kitten. Now, I don't know if they actually got their shots or not. It could be an internet scam. Like, yeah, I got the cat shots, and I'm asking $150. My take on this as a responsible human being is, if I was to go out and get a cat and you told me you got its shots, I probably wouldn't believe you. I'd probably go get new shots. I would. You might not, but I would. So I don't want to pay $150 to you. I want to pay it to the vet to take care of it. So I told my kids, I'm like, put the fucking cats up, take some cute pictures, put the goddamn cats up on fucking Craigslist, wherever the fuck else you can place. Put these cats up. They're like, oh, daddy, they can go to the cat cafes. There's like 3 of them. We can take them down there. I'm like, oh, hell no. They're going to want me to pay for taking someone else's goddamn kitty cats. They're going to be like, if you want to drop these cats off, it's going to cost you $350, and then we're going to charge them $500 to take the cat. I know how this shit works, the cat economy. Now, I'm like trying to threaten my kids because I don't want to pay the fucking money to get the shots for these goddamn cats once they're strong and ready to get their penises cut off and their shots and their vaginas closed up, whatever the fuck it is that they do. I shouldn't say it because they know how to do it to cattle, but you know, like, I don't want a fucking cats. And then they're like, well, we want them if we don't find anybody to take the kitties, they're going to be indoor cats, daddy. I'm like, we're not doing 5 fucking indoor cats. 4 or 5, whatever the fuck the number is. We ain't doing that. So now I'm negotiating with the kids. I'm like, if we keep these cats and nobody takes these fucking cats, I'm like, these fucking cats are outdoor cats. I'll set them something up in the barn for them. I'm serious. I'm like, I'll set up a place from the barn. They can come in and out whenever they like, but this isn't going to be a house of cats. This ain't going to be no goddamn house of cats, okay? Look at that little bit of rejection right now. Bulls trying to hold on to the half-hour trigger. If we get a rejection here on 422.46, we're going to look for the downside target. The previous low of 420.53 if this begins to fail. So I don't know how to threaten my kids. Like, they're telling me they're going to do this stuff, but I don't believe them. I think they're fucking lying to me. I think they're definitely fucking. There's the previous low right there. I think they're lying to me. And then when are they gonna do? They're gonna go to college, and I get stuck with 5 cats. Like, is that what my job is? Like, you go to college, I take care of cats, then you come home on the weekends when you have time to say hi, kitty. I'm not being relegated to that. Well, that's my take. Is like, if I should have 22LR would have Joe Donut. It's like, what about a 22LR? I'm like, yeah, that would have done it. That's like a coyote, right? Say the coyotes took the cats in the middle of the night. I don't like. What is it going to cost me to take care of these fucking cats? It's not cheap. You can't trust members, man. You can't fucking trust members. Like, we got a member. His name is Flama Blanca, right? Like, you find out who he is. He's like, yeah, Cap, I'm a bull. But then you get his trading view handle, and what is it? Pooh Bear 69. Goddamn closet bear. Fucking closet bear, man. You like, people be like, oh, my handle is Super Bull 10. And you're like, yeah, that's a bull right there. Then you're like, what's your trading view handle? And they're like, the trading view handle is I've been a bear since 1950. And you're like, God damn it. Goddamn closet bear hiding out as a bull. Oh, my boy. I'm almost coming up to my boy E-Trading Shorts. God damn. You know what? I'm reading some of these names in here, and I fucking love all of you. You guys are my boys, dude. Like, I'm looking at some of you guys in here that I'm granted access to here, and fucking loyal fucking friends. Good to see the people that are getting access right now fucking deserve it. Been there since day one. BD Tank, done. Trading shorts. My brother. Oh, wait a minute. Let me find you real quick. Oh, we're still holding. We're still holding. There's trading shorts. He's done, or he's getting done. I got 2 more to give him. There you go. If you have access to the tools, you should have 3 tools. There you go. Trading shorts. What up, super gal? Get some. How about this? If we're gonna do something real quick. Hold on here. If Jill Natolo is here, Jill Natolo, Stacy, if you're here, and Brittany, if Brittany, Stacy, or Jill are here right now in the stream, if you guys could give me your TradingView handles, I'll throw you on as beta testers. You 3 have been with me since the day 1, so Brittany was late, but I promised her as well. So if Brittany's here, where's Brittany, Jill, and Stacy? I don't know if they're here right now. I got you. Add access. Done. Damn. All this free access. Woof. It's a bunch of money here. You know what's really crazy about this? The version of the tool that you're getting is the version of the tool that you're getting is like the $125 version. You're not getting the on website tool. You're getting the tool that I'm not supposed to be giving out to anybody. So congratulations, see if you're getting it. Okay, I think I've got everybody. I think everybody's on that's supposed to be on right now. You know, we've got all the administrators, we've got all the moderators, all the administrators. You guys should be good to go. So let's talk about the tool right now. Let's have a conversation about it. How to implement the tool, the behaviors of it, all that kind of stuff. We're going to talk about it right now in stream, okay? So we're going to go over it. Actually, we got a few things to go over, but what time is this? 1:56 in the afternoon. I'm going to give you a brief overview, okay? And we'll chat about it. So we're going to go to the trigger screen right here. And indicators. We're going to go to invite-only scripts. So I want you to see the scripts right here. This should pop up for you. Oh, all right. I guess that didn't do it, did it? So up here in the top left-hand side, you can't see it on my screen here, but let me see if I can bring this down. So on my screener, I want you to see this button right here where it says indicators. You're going to click on that, okay? So indicators. If you click on indicators, it should say invite-only scripts. You should see from Cool Algos, you should see 1, 2, or 3. Right now, I'm only using the triggers with channels, and I'm using velocity. Okay. You click on these, click on that, and click on the yellow. It's not yellow. Like, see how it's not yellow? The star. Now it is. That'll make it put it in. It'll also put that in your favorites, so that you always have access to it. So you click them once, click each one once, and then also, don't forget to highlight to add it to your favorite indicators. And it should pop up on your screen. Now, we're going to talk about the indicator on your screen here. When you cycle on different time frames, you're going to get an auto calibration for those time frames. So if you're a day trader and you're trading the 1-minute chart on TradingView, you're going to get a certain set of triggers and velocity. If you switch to a 30-minute chart, 30 minutes, you're then going to get a separate package of triggers and velocity. If you then switch to a daily chart, you're going to get a completely different set of triggers and velocity. So I want you to be aware of that. 1 minute, 30 minutes, and daily. So if I cycle through here on the top left-hand side, if I cycle through, let me mute my thing over here. My camera and my web frame. So if I come up to, not indicators, pick up to the time frame, and I pick 30 minutes, you will notice that I get different velocity and different lines. If I switch to a 1-day chart, I'm going to get different velocity and different lines as well. And personally, I like to use the daily trigger. Or the daily trigger package. I like to use for macro analysis. So where are we on a much higher time frame than trying to buy calls or puts for 1 to 3 months? So I'm basically looking for. So right now, specifically on this daily, I'm looking for that cross there, because the target is this downside here, right? Target is 403.64. And then I'm looking for these time frames, or these time frames down below, this 322 down here and this 281 down here. The velocity package that's here, what matters about it is I want you to like fuck around with this on your own, and I want you to see how we have moments of accumulation on daily, weekly, and monthly velocity. And once we get to plus 50, we start to sell off of it. Same thing happened on weekly here. We sold off of it, right? You can actually see the continuation to the downside here. But the ones that matter the most is usually the light blue, the orange, and the yellow. As a matter of fact, if you look back here in 2022, you can see we were maxed out on quarterly velocity, at yearly velocity, weekly velocity. So right in here, we were maxed out, and it was foretelling that the market was about to top and roll over before it happened here, okay? We don't actually see that right now, do we? We don't actually see the topping here. Well, we just see the topping here in weekly. We're starting to see the monthly and quarterly heading into negative territory right now, right? So that's kind of bearish, not bullish. And your weekly combined with that is not looking good either, right? This is kind of a foretelling. See how we break below over here? Came back up over here, and we're now coming back down, right? We break negative here. It's likely foretelling a move to the downside over here. Now on the 30-minute chart, I'm using daily velocity, hourly velocity, that's the green, 30-minute and 15-minute velocity. I'm not using anything, the 1 minute, the 5 minute, not using that velocity down here at all, am I? I'm just using this higher time frame velocity. What is this velocity saying to us right now? On a 30-minute chart, it's saying that this should hold. Right, we're at the bottom. We're at the bottom here. We're at the bottom here. We got some higher lows going on. We got this deep bottom over here. We're kind of bottoming out on daily velocity. So even though we are weak right now, right, it's telling you, like, we're not that weak. Even though we're weak, are we looking for a bloodbath? More than likely not, right? Likely not looking at a bloodbath. Looking like any kind of weakness will hold and will actually go up here. So right now, if you're watching SPOOs on a 30-minute basis, intraday basis, it's looking like, well, the daily trigger is saying we could go down a little bit more, but we're getting really long in the tooth on being bearish is what it's saying. So if I go to this Webull chart, and how bearish does this look? This is pretty fucking bearish, right? This doesn't look good. We're underneath the hourly trigger. We never like seeing that. We have a cross coming up right now on the 1 and 5 minute here. We've got a 3-trigger bear cluster, right? 3-trigger bear cluster. And the daily trigger is saying, we could have some more down to go, but is it going to be a crash? Probably not. So any kind of weakness heading into this close on a 30-minute basis, I'm going to expect for there to be a bottom to buy. Make sense? It's not like crash, crash, crash. It's just saying this weakness should be temporary and not crazy. So right now, if we had this setup, and velocity was on the upside, if we were way up here and way up here and way up here and way up here, I would say to you that expect a bloodbath here to the downside. I would say expect a bloodbath. And if you want an example of that, I'll give you one right now. So you can see it as we came into the topping pattern in the market. You can actually see the daily velocity starting to go lower, even though price is not showing it, but it's anticipating a topping pattern that's going to roll the market down, right? But we're just starting to bottom down here, right? You see that? See that just starting to bottom down here? So what kind of weakness would I expect in price for all of this bearishness over here? And my answer is going to be not that much. Not like I would have expected if we were topping in the marketplace. And the daily trigger has had some time to get down there, right? You can actually see on a daily basis that the daily trigger's been lagging down here, right? But even though it's down here, it's the time to start thinking about buying a dip. You know what I'm saying? The time to start thinking about buying a dip. What's your poison? What's your price? Is it 420? Is it 413? Is it 416? Whatever that is, this is saying to buy a dip currently. On a 1 minute basis, if I switch over to this one, what am I looking at for on this 1 minute chart? So I've only got the hourly. I don't have daily any longer. I've got half hour, 5, and 1 minute. Also want to point out that the 15-minute and half hour are not to be trusted. But I do use them as I do assign the half hour trigger importance based on the hourly and not the 1 minute trigger. So this is a 1 minute time frame right here. And what do I want to see to get bullish again? I see the cross above right now. Do you see that cross? This is bearish, so you can't get bullish right now, right? I need to see price get back above, right? And the cross to take place, and this to turn to long. This key over here will tell you if you're bullish or bearish. So what I'm going to ask you to do if you're going to beta test this is what I want you to do is I want you to just look at it for 2 or 3 days. Don't trade it. Don't use it, especially if you're a futures trader. If you're a futures trader, if you trade futures, this tool is fucking phenomenal. But what I want you to do is just keep it on in the background, watch the market with it. Don't trade real money with it. And I want you to tell me what you are taking away. Like, what does it mean to you? Like, is this telling you that that a support level will hold, that a resistance level will be broken through? Will the support level break, or will will we reject on resistance? So, like, those are some big things, right? Is it bouncing on those levels, on those triggers? Are we rejecting on those triggers? Does the velocity give you any kind of insight whether it's going to hold or not? Does the box on the right-hand side tell you anything? When we're max bearish on multi-time frame velocity, are we holding or not, right? So I want you to report back to me what your takeaways are, not knowing anything or having any access to a white paper or training, video training. So I want you to just hang out with this, use this tool for like 2-3 days. And matter of fact, you don't even have to do it in real time. You can just look at your favorite tickers. Like if your favorite ticker is USO, if your favorite ticker is GME, if your favorite ticker is Tesla, look at your different time frames on your ticker and tell me via email. I'm going to give you an email address. And I want you to tell me what your takeaways are in just those 3 days. Now, what we're going to do is, what day is today? Today's Wednesday, right? On Friday's broadcast, Friday's live stream, I'm going to do a training live stream with you. So I'm going to go through how to use the tool on Friday. It'd probably take us all day long, though we'll watch the market at the same time. But I'm going to do a training session live with you on Friday. Binky's going to record it. And we'll package it up into little like videos, like 10-minute segments. If you can't be there on Friday, it'll be posted to the YouTube channel, and you'll have access to that training video, and it'll tell you this means this, and that means that, and this means this, and that means that. So you should have no issues after Friday. So you can either show up on Friday to that training class, so we can go through the tool, or you can watch it later in the future. But for just right now, just I want you to just work on, like, just use the tool, fuck around on the internet, use it on VIX, use it on HYG, use it on ES or NQ or oil and gas, use it wherever you like, and see what your takeaway is from this tool. If you're a day trader, how about you just trade your day away and keep the tool open on a second screener and just see what the tool is telling you versus what you're doing. And can I better it for you to make it better? Or was it telling you something and it didn't work? Because I think it does. But I want to hear your take on it, because if it doesn't, I want to make sure that it's absolutely fucking perfect for you. Yeah, we're going to talk about something right now for you. So just right away, we're going to talk. So if you've got the triggers up right now, Jill just said, why are my numbers so different than yours? We're going to talk about that really quick. So on the top right-hand side of your screen, the first thing you want to do is click on the cogwheel. You can't see it here, but see this cogwheel right here? You see that cogwheel where my cursor is? It says chart settings. If you click on that, it's going to bring up a chart settings menu. Okay, and I want you to, first thing you do is I want you to click on session. It's symbol and then session. And I want you to change from regular trading hours to extended trading hours. Extended trading hours. And tell me if that helps at all. Jill, let me know in the chat if that helped you or not. And on Friday, we're going to go through and I'm going to show you my settings. On Friday, I'm going to go from top to bottom. So if you have a new TradingView account or even an old one, on Friday morning, I'm going to go through all the settings that I have, how I set mine up, so that you can be the same as me, or if you're like, fuck you, Cap, I don't want to be the same as you, you can not be the same as me. You're welcome, Jill. Yeah. So we're gonna go through how I set mine up with you on Friday. And if you don't have TradingView and you just got the access, or if you just got your new TradingView account, we're gonna go through it from step 1 all the way through the white paper. So we're gonna go through the entire training course on Friday for how to use it, how to interpret it. And you should be baller from that point forward. If you're a moderator or an administrator, you should have like the cats. You should like be fucking ready to rock with that tool. So the past couple days, we're forcing our kids to feed, burp, and pee and poop to make the cats do that stuff. And we'll wake up with them and do it with them, but we're having the kids responsible for this. And the one thing I was telling my wife last night about was, I was like, do you remember when you were a kid? I'm like, when I was a kid, they gave us, I think it was in 5th or 6th grade, they gave us an egg. And they were like, you have to have the egg for a week and you can't break it. And of course, as a kid, I was like, I'm not going to break that egg. And then I just focused on it for a week. And of course, I broke the egg. And like people were like making names for the egg and they were dressing the egg up. And it was a pain in the ass to take care of it. And it was a real pain in the ass. So now I'm like, fuck this. If these kids think these cats are theirs, I'm gonna make these kids feed these kitty cat babies every 3 hours. And it's like every 3 hours, 24 hours a day, you got to feed the kitties. So Joe Donut is saying we are beta testing. To reiterate, we are beta testing our product with a select few, like under 10 users, to validate our product before launch. This is not a free product, and the beta testers will be providing us with regular feedback during the test. So I'm gonna give you guys now. I'm gonna on that same line of thinking that Joe is doing right now, I'm going to actually show you guys something. And I think it was posted in the Discord, but I'm going to read it to you, okay? I'm going to read something. I'm going to read something for you. Let me see what I sent here. I'm going to read something to you specifically. Who did I send this to? I think John L. posted this or was going to post this in the Discord, but I'm going to read it to all of you just to make sure that we're clear here. Where's I thought I sent this to. Hold on a second here. Oh, we're getting the just heads up out there. If you're cheating on your wife or your husband, hide your phone. Hide your burner phone because it's probably going off right now. So if you're cheating on your wife, right, and you left a burner phone at home, it's probably going off right now. The U.S. is performing an emergency broadcast system test currently, so you're probably busted. Is your drug beeper's going wild? I'm going to text you 70053 right now. Read your beeper upside down. No, I got kitties crying right now. They're being fed. I think they're on their feeding schedule. Is the squeeze coming? I'm long, so I don't know what to say to you. I own 300 440, 450 call spreads for December 29th. So you tell me. I'm long. I'm long as fuck here. I'm a believer. Well, let me say what I am right now. Let me be very clear here. I'm a believer that this is the place for you to buy. Like 420, 416, either of those works. You buy those numbers, not financial advice, but that is the place to buy without saying financial advice. Saying that, you must manage that trade because there is some fucking doom coming down from above. And whenever price squeezes up to that daily trigger, you're going to be, there could be some rejection there, but you want to see price break above that daily trigger. And if you're not going to buy here, we're going to talk about this too. We have to talk about this. So if you're not going to buy here, and you're like, Cap, I really like buying the market breadth indicator, but I don't want to place the wrong trade. I will show you something that you do need. You can take a screenshot of this, okay? If you want to buy the market breadth oversold indicator and you want proof first, I respect that. So what you're looking for is you're looking for price to first squeeze here, fail right there, come back down to the daily trigger, and then begin to trade higher, okay? So if you're looking for that moment to buy the market and you're like, Cap, too risky right now, I can understand that. So you're looking for price to come up, come back down on the daily trigger, and be swooped up to the upside, right? So the daily trigger goes up there, and price starts trucking along, right? We already took this one out. We take that one out. We take this one out, and then we're heading for that one up there into end of quarter. So the simplest answer would be, you're waiting for price to get above 435.87 and retest it. Like you want to see that failure right there, and you want to see it hold. You want to see the hourly trigger come up from underneath, and the hourly trigger help price go higher. So that would be my only last caveat that I should have mentioned would be you'd see the hourly trigger. It would be down here somewhere, right? You'd see the hourly trigger come up here and help the daily trigger out. And this would be price right here. So if you're like, Cap, I want to wait until this happens to take along. I understand waiting for that. I understand why you wait for that. Because I know what happens if that doesn't happen. What happens when that doesn't happen? We're going to sell to the depths of hell. We're going to sell off that daily trigger. Right? We will wind up rejecting this daily trigger. The daily trigger will cross the weekly, and we will start heading to the depths of hell. So you can either take the trade right now and just manage it, or you wait until it blasts above, comes back down, and holds above the daily and the weekly. Oh, dude, look at that nice, beautiful fucking bear flag or a bull flag right there. Look at that nice little bull flag just trying to get above, trying to squeeze up there into tomorrow, trying to trade that 426 or 426, 425.91. It's just begging to go up there. Look at it, just begging to go up there right now. Yeah, I bought call spreads yesterday. We were at like 420 and some change. I got a purple line where I bought it. So ran this purple line down here. 419.99. 419.99. I think I started talking about it yesterday. I started talking about buying it, and by the time I bought it, took me like a half a fucking hour to set the trade up, and then I posted it on FinTwit, so it took me some time. Like where I wanted to buy, I think 418.10ish. I think we hit 418 at one point, and I was like, I want to buy a fucking call spread here. I'm like 418 and 414.16. It's not gonna matter in 3 months. Like, let's be truthful here. Let's be honest. If I buy 418 or 416 or 414, and my conviction is we're going up, it ain't gonna matter. That couple dollars isn't gonna make a difference. On a spread, it's not gonna make a difference. It's like hand grenades and horseshoes. If I was buying calls, it would matter. They will reprice some like individual calls. They will reprice for that eventual squeeze. So yesterday I was like, fuck it, I want to capture all that theta. Like burning all that theta, like if I wait another day or 3 days. If anyone bought calls 2-3 days ago, you're fucking styling right now. Because you're scorching theta as well. Like as long as you keep killing that theta, keep knocking days off the calendar, and we're heading higher, and we're not going any lower, those calls will be in good shape. So yeah, it looks like a stop hunt, doesn't it? I'm still bullish here to the upside, so. So I'm going to read to you guys. I'm going to try to read to you. I'm going to slide over here. You're not going to see me, but I got to read something to you guys, okay? So I want to thank all of you. Anyone that has access to the tool to beta test, I want to thank you for your interest in beta testing. One of the tools that we have more than that tool, but this one specifically. It's a 2-part indicator suite. Though one of the parts has 2 options, that's with or without channels. For access, you already know about the access. What else do you need to know? You may be asked specific questions about the tool. So I will be asking questions about the tool inside of the Discord channel. That is the moderator, I think it's like multi-stream or multi-location moderator channel. I will be asking you direct questions in there about your experience with the tool. And I may also ask you for your email address so that I can send you directed questions at the end of each week. I do want you to be aware that for continued access to this tool, you'll be asked questions. The reason you have access to this tool is to answer questions in the testing of it. So if I reach out to you and you don't respond in a timely manner, like if I ask you on a Friday and I don't see any response by Monday, Tuesday, I may rescind the access to that tool from you. I need you to, I'm asking you to be a beta tester, to give me your findings. Like, hey, I haven't read anything. I'm going to give you my findings. Hey, now I've watched some videos that you've made. I gave you my findings. And then I'm going to present to you a white paper, and you're going to make notes on that white paper and resubmit them to me so that I can make changes or make changes to the rules, any of that kind of stuff. So we can help our fellow retail trader out. Well, ultimately, this is to benefit your fellow retail trader, whether they're bear, bull, buy, or sell, I don't care.
Diesel November futures settle at $3.02 a gallon. Gasoline November futures settling at $2.20 a gallon. And finally, NYMEX WTI crude November futures, they are settling at $84.22 a barrel, which is down $5.01 or 5.61% on the session. So again, WTI crude settling at $84.22, that being down 5.61% on the session.
Maybe we should take a look at Brent right now. So I am asking you guys out there to help your fellow retailers out, your fellow retail traders. And I also want to let you guys know that, or two things, two important things here. If you don't see the invite tab on your TradingView on indicators, re-log in or reset your TradingView accounts, like refresh it. And it should pop up then. The second thing that I would like to tell you is that if you have any questions, if you have any pertinent questions that I'm not answering for you here, I want you to reach out to me at CaptainJimJames@gmail.com. I have an email address for you on the website, but I don't know that it's set up yet. Maybe Joe Donut could give the different email address if it is ready to go. But if not, I want you to send all questions to CaptainJimJames@gmail.com. I ask you, if you do send an email to that email address, that you please keep it clean. I do have my oldest daughter checks those emails for me, and my wife checks those emails for me. So I ask that you, I know that here, how we are here is not how I am with my wife and kids. This is more like it's like we're in a boiler room, all of us together. But, you know, when you leave the boiler room, you leave the boiler room, right? So I'm asking you to, because they're helping me in the back end of this with questions that you may have to help you guys out. So just on that email address, try to be cool. CaptainJimJames@gmail.com. I have another email for you, but that'll be dispersed to actual people, other people that'll help. But for right now, just respond to that email address with any questions or concerns, any insights that you might have, and I will also be posting questions and polls inside of that Discord channel. Yeah. Always be professional. You never want people coming back and being like, that guy wrote me this fucked up email or text message, that kind of stuff. They kind of have you. They kind of have you if you do that stuff. So it looks like a mini Head and Shoulders here, doesn't it? Mini inverted Head and Shoulders, doesn't it? Look at that little Head and Shoulder there. You got a little bit of a PP there, and you're just kind of waiting for that thing right there, so you can kind of go right up there, right? You see that? Whoop. Do the sneaky Pete up into the close. Yeah, John L. is a fucking beast, man. He is a beast. Genius trader. He's up there with David AMS. Probably my two favorite traders on our Discord right now. If I had like two top traders there, probably David AMS and John L. If I had to pick. They like forced me into picking. Woo. You guys want to see something cool? Price action is all about rates. It matters right now. Rates do matter right now, but they don't always matter. I think there's always that caveat. They matter and they don't. Sometimes they do, sometimes they don't. But they do matter right now. I will give you that for sure. Rates are a concern right now. One quick second here. See if I can get any insight here. So zero date gamma distribution 4200 and 4260. And so 4200 is big. In terms of zero dates. We also have more puts being rolled lower than 4200. So yeah, I want you to know. I'm going to talk to you guys about some right now. So 4,200 on SPX is kind of the place where you don't want to lose. You don't want to lose that as a bull, right? So as a bull, I want you to know a few things. Number one, you do not want to lose 4,200. Number two, I don't know if I showed you this earlier, but I talked to you about the new puts. Let me see if I can show you this. Let me see if I can actually show it to you in the form of a chart. Hold on here. I was talking about it earlier. So there's been a roll of puts down to 410. And let me see if I can pull it up here for you. Actually, 4,000. They've rolled down to 4,000 at this point. Let me see if I can. See if I can show this to you. So I want you to see this chart here. This chart right here is current. This is current as of today. So pay attention to the rolling of puts. Do you see them down here? So they rolled puts down now to 4,000, 4,010. Massive, massive puts down here. And there's some calls down there too, but they did roll into this 4,010, 4,000 and 4,010. So just be conscious. So this 4,200 right here, you don't want to see us break. I don't think I can put a tool up. I don't think I can draw this, but can I draw on this or no? Maybe not. If you just follow my cursor, I want you to pay attention to my cursor is right here. You don't want to give up this 420. If you give this 420, it opens the door to 410 and more scarily 4,000 down here. Do you see that on my cursor right there? So it is important and imperative. So we're trading 422 right now. It is important and imperative that we don't break that 420 on SPX specifically 4200, not on SPY. Well, I want a bull to know that, like, so they didn't close up their puts. That you know what's fascinating about this too is, had they not rolled their puts, listen closely here, okay? Had the market not rolled their puts into lower strikes, i.e. 4,000, we'd likely be trading that this week. So if the market was unhedged into 4,000, 410, there's a very good chance we'd be trading that this week, next week. Now, the fact that the market has hedged to 4,000 and 410, it does to some extent, unless we start breaking 420 or 4200, it's going to act as a buffer from us going down there to 4,000. I know it doesn't make any sense to you, but I'm trying to simplify it as best I can. So after the past couple bad days we've had, let me rephrase this. After Q3 ended, we did not have a hedge on the market, but they've been adding a hedge the past few days. So someone out there is buying a shit ton of 410 or 4110s and 4,000 puts on SPX. They didn't a couple days ago, but they are right now. So these fucking guys are coming out and loading the fucking boat on puts. And that typically results in the market going higher once it's well hedged. So it's kind of a bullish thing, or it can be construed as bullish. We had more risk to the downside on September 1st, 2nd, 3rd. There was no hedge. All that hedging that came off was not replaced, but it has since been replaced. Oh yeah. Yeah, and they're all new too. They're not old. They're not from the beginning of the quarter. They're from today. So they'll have a tendency to repel. Who's ready for that fucking squeeze, by the way? You guys ready for the rip? I want to warn you to make sure. I'm going to warn you really quick before I take this break. I'm going to need to warn you of something, okay? Do not get caught in a bull trap. Okay, so I'm going to show you this. I'm going to raise this up. Do not get caught in that right there, okay? You really want to be like, you want to see that squeeze? Actually, let me get rid of that. That's a danger zone right there, okay? Don't get caught in that danger zone, okay? Do not get caught in there. That means take your money and run, then jump back on the train above. I'm also going to move these lines to the right so that you have a clear understanding of what I'm talking about here, okay? I don't want to mess with your your jam here. That should work. I'll be right back. And I guess I don't know. That's for you to decide. So if you're watching right now, if you're a new person watching, I'm going to recommend a few things to you, okay? If you want to get integrated, this is what I recommend to you. Sign up on the Discord. Treat it like you're going to someone's house for the first time. Be quiet, walk around, read a bunch of shit, and then ask questions. What's this? What's that? This, that, and that kind of stuff. I want you to know, if you're new to following us, that we have some of the best traders in the market in our Discord. Bad motherfuckers. If you're a losing trader and investor, you're like, I blew up my accounts. I see people on Wall Street Bets. I blew up a $500,000 account. You can go right in our Discord, and we got guys in there that will stop that from happening with proof. We'll show you. We actually have traders in there that were losers. They don't lose anymore. They're done losing money in the market completely. They are making money. So go ahead and check out our Discord. Number 2, sign up for that at Captain's Alpha. Number 3, sign up on that Prime Gaming. Right? Subscribe via there. Start chatting. All this costs you $0 fucking dollars, right? And then follow us on Trade the Trigger, the handle. Set alerts on that handle and start reading the stuff that a lot of people pay a ton of money for every morning and night, or around there, whenever they matter. Whenever there's a reason for me to post, I will. But post or check in on all that shit. And then start tuning in when we have live streams. Now, right now, I haven't been live streaming the past week, I think. I maybe did 1 or 2 last week, but I haven't been live streaming. I want you to realize that if you're new here, I want you to realize that nobody streams a stock market show 8 hours a day, every day of the year when the market is open. So there's going to be times when I can't be here every day for 8 hours a day. There are times when I can't, that I have to get pulled away to deal with or take care of or fix or implement stuff for you. So if you're like, hey, why is Cap not streaming today? It's because I'm working on shit here in this office with this equipment, trying to get the next level for you. Okay? So but outside of that, show up to the stream every day, sign up for that stuff, get in the Discord, integrate yourself with what we're doing, and see if this helps you as become a better trader. If you're a new trader, if you're an older trader and you got something to help out retailers with, do the same thing. Jump right in and ask some questions and start helping retailers out. Because the entire function of this is to help you Stop being a fucking losing trader and investor and just become a winning retail investor and trader. Where's Cap in Michigan? I do like that. Where is Cap? I need you guys to understand what it takes to. I know it on the like on your side of what you're watching, what you think it takes to do this. It's like just having the equipment, the services, and the electricity and the internet on, in and of itself, is a nightmare. That is a nightmare. We're not talking about preparing for it and being ready and reading all the shit that you do at nighttime. I got to do all that stuff. Like, there's a ton of shit I got to do to be here live every day. And so there are going to be times when I can't. And it looks glaring because I am here every day. Having me do a show every day
the early market on close imbalance,
means that when I'm not here,
to the buy side.
You guys notice it, right? You're like, fuck, he's not here today and he's not here this week. He's upset. He's angry. He's got that going on. He fucking burned a trade down, or, he's trying to do this shit with the website or whatever. It's glaring. But that's because we do so much streaming that you feel like that. If I was only to stream once or twice a day for an hour, or 3 times a week for an hour or two, like pop in for an update at 6 p.m., pop in at 9 p.m., pop in at 9 a.m. for an hour, you wouldn't notice it as much. If I had recorded videos at nighttime only for 15 minutes, you wouldn't notice it. But because we do a live stream 5 days a week, all year long, you do notice it. And I understand that. I respect that. I get I get that you're angry. I get that you're pissed off, but I can't be here like maxed out. I can't. I got so much other shit I got to do for you guys. It's like sometimes it's like I'll like contact somebody at like 4 or 5 in the afternoon. Like, I'm done for the day, and they're like contact me at 9 a.m. and I'm like, I can't. I got a show to do. They're like, fuck you. No show for you today. You're working with me all day long tomorrow. So I was like, nothing I can do there to combat that at this moment for where we are. I can't. Just lonely and want feet pics. Squeeze an iron now, trading 425.43, coming into R1 right now. Situation looking good for the Bulls. Go to a 5-minute basis here. We're gonna talk about what to expect for the rest of the week. So this will be a written stream here, right? Well, this will be a written post via a stream. So we're gonna head on over to Webull, and we're gonna chat about what to expect the rest of the week. It's now 3:42. And what do we know about the rest of the week here, right? We know that we're squeezing, right? This squeezing here should not be considered bullish in any way, shape, or form. I would not trust this squeeze in any way, shape, or form. What I do trust right now for a bull is I trust not any, but any time we come back and test and stay above the hourly trigger. So I'm going to trust that trigger right there. If we scream down to the downside, would not shock me. But I know I can buy this green bar whenever we get there with a stop underneath it. I know I can buy this green bar. This green bar right here, I can currently buy. I can buy it. And where's my target? As long as I'm buying that green bar, right now my target is this weekly trigger upstairs here. Okay, so my target right now is currently 429.46. So into Friday. Today's Wednesday, Thursday, and Friday. What are my expectations here? My expectations are you buy the hourly trigger every time we touch it, and you are looking for that 429 into Friday. Okay? In the meantime, I'm going to expect this daily trigger to float down to 435, somewhere in here. We talked about this last week. I said to you, by the time we come up to test the daily trigger, it should be at 435. It's not there right now, but it's almost there. And do I think bulls can get there is the next question, right? I do. I think because of where we are that we can get there. I think that we can trade this weekly trigger, sell off of it, and look for some help from the green bar to squeeze and trade this 436.63, which should be 435. Whether that's this week or next week, I don't know, right? But I do think we're going to squeeze it. Now, if we do squeeze this, I'm going to give you some fair warning here. If we hard reject, not just reject the daily trigger, but we hard reject and start to come underneath the weekly trigger and the hourly trigger reverses on us. So we squeeze up here, and then this hourly trigger is up here. It's up here, but then price breaks below the daily, the weekly, or hourly and weekly. I'm going to get some real fucking bear on here. So this right here, I'm going to get really bearish. If you are a bull, you want to see price break above. You want to see the hourly trigger catch up. You want to break above. You want to see the hourly trigger break up. And you want to see price hold above 435. You must get that. If you are a bull, you fucking must have 435. There ain't no like buts, if and buts, or about it. You have to get above this, and you have to hold it. Like, you have to hold this. If you fail to hold this, look out below. I mean it seriously. In a really serious way, look out below. And I'm going to show you how that plays out right now on the triggers. And this, we spent some time on this morning. And I addressed this with our people that were here. And this poll that we have out right now, what I want you to take away, I'm going to delete all this right now. You guys already have access. I'm going to just hide it. Can I hide? I think I can hide all this stuff. I think I can hide it. Let me see. Remove. Maybe I can't hide it here. What I want you to understand about where we are right now is this. Bulls must, and there ain't no time left, bulls must thread the needle. I don't care if it fails right here, but it must come above. Situation normal, market fine. You see the daily trigger comes around, right? Weekly trigger below, situation normal, no market crash. Looks beautiful. Everything is awesome. Woohoo! What you don't want to see here, what you do not want to see here is a rejection of that daily trigger. You see this shit here? Boop, boop, boop. You come up there and you see like bulls are like, oh, I'm scared. And we start to reject here. And this daily trigger crosses below that weekly trigger. Cut your fucking call spreads loose. Put on your helmets, because it's going to get fucking brutal. And I'm serious. This will be a nightmare scenario. You will see us trade 4,000, and if we break that 4,000 and start trading under it into end of quarter, you will see 350 by end of Q4 or in the beginning of Q1 of 2024. So we are at a crucial moment in the market right now, a crucial moment in the marketplace, and you need to pay attention to it as a bull or a bear. Doesn't matter which you are, buyer, seller. You need to be hyper aware of where those levels are and what can happen there. Squeezing right now, retest of the 1 minute trigger at 42479. Still trying to trade up and into that R1. Trying to tag R1 into the closing bell. So far, the 1 minute trigger is holding here. Darth Moley, love you, brother. I'll see you tomorrow. What else you guys saying here? Please hit the like button. Thank you, Stacy, for saying that. If you could do me a huge solid here, if you could comment on the YouTube video, not in the chat, but just in the comment section, make a comment. I don't care if it's good or bad. I don't care. Also, hit the like button on these videos on YouTube and the like button on Twitch. Good question. Am I going to be here tomorrow? I will be here tomorrow. I have one small thing that I just read on a message. I'm not 100. I'm like 80% sure I'll be here tomorrow, but more than likely I will be here tomorrow. If I can get another guy to work through this shit that I'm reading, I will be here tomorrow. If I can't be here tomorrow, I'll let you know. But tentatively plan on me being here tomorrow, or the rest of the week. I think. So we had a big meeting last night.
Sitting at 2.3 billion to the sell side. So again, market on close imbalance at 2.3 billion to sell.
And I seem to be under the impression that what we need done is going to be done without me having to be there. So if that's the case, we'll If that's the case, then I will be streaming
This
every
stream
day
is
as long as
sponsored
that's
by
the case.
Tick. Get free daily pivot points, Fibonacci, and market profile levels.
Thanks, Legend. I
by
appreciate
signing
that,
up
brother.
at
I see that. I saw that
tick.com.
comment. LegendX22X says he fucking watches the show on Twitch and YouTube, so I get the view counts. I love you, brother. Appreciate that, man. Love you, man. Yeah, so they're gonna call. I think if I have to guess, that's what they're doing right now. They're calling him on that shit. Like you're out of your fucking mind. Do I think it could have been? I think it could have gone to 7 basis points if he didn't say anything. Like I think like that presser. I think he went into it thinking, I have to make them believe that we're going higher for longer. So we're gonna break out the charts this time. And that was the wrong thing to do. So, so now that he's done that, well, I think he's going to get called on it. I think having that kind of a plan. I mean, he had a 10-year chart out. I was like, the fuck you doing with a 10-year chart? That's some like Northman trader shit right there. like you know, we like it, but we know it's not real at the same time. There ain't nobody breaking out no 10-year chart and being like, this is where we're going to be in 10 years. It's fun. It's great. Yeah, I fucking love it. But I'm not living my life on that chart, right? I like Sven. But like the Haas does it. He'll do like a compressed, like, I think I've even done it. Like I'll do like a chart of like the NYA going back to like 1894, and I'm like, I'll do like the monthly chart going back to 1894. I'm like, look, it only goes up and to the right. It's fun. Is it real? Fuck no. Is it like real in terms of how you're making money? Fuck no. Fuck no. Fuck no. Fuck no. If you want my take on what happens here, I don't know. My honest opinion is, we do squeeze up to that daily trigger. If we get caught, though, it's bad. It is fucking bad. It's going to be nasty. If we go above that daily trigger and hold it, I will turn extremely bullish to the upside to the end of the quarter. But for right now, if anyone's going to call, we're crashing or we're going up to 450 or even higher, I think that's a gamble. I think it's a guess at best. I think if we the reason being is, if we reject that daily trigger, right? If we reject that daily trigger and banks start panic selling, which is they're trying to do it right now. I want you to know separate the economy, separate bond market from the equity market. If you're in the equity market as a bank, they want to front run each other. They don't know if it's now. They don't know if it's in spring or summer. They don't know if it's 3 years from now because Jerome is going to raise 20%. Bring rates 20 BPS. They don't know. The one thing that they do know is the moment that rates will never be raised again. Listen to me closely here. The moment that they realize that rates will not raise ever again, they will try to front run each other to the bottom. That's what they will do. So they're trying to do that right now, right? It's almost like a game of musical chairs or a standoff with guns. So basically everybody has a gun to each other's head, and they're like, who's going to exit the market first? Is it me or you? And I'm making this point because if we do reject that daily trigger and the daily trigger crosses that weekly trigger, I assure you that will trigger banks to make a mad rush for the doors. So it'll be last guy out, right? Last woman out. So if that does happen, you will see the market panic and you will see a crash, regardless of what your projections are. So if you're like, hey, we're going to crash now, we're going to crash in spring, we're going to crash in summer, we're going to crash in December 2024. We're going to crash just 2 months before Jerome pauses and starts cutting rates. Whatever that thesis is, doesn't matter. Truth is, if that panic begins now or later, it doesn't matter. When it happens, you need to be ready for it to happen, be able to identify it, and be able to trade it. Okay, so I'll see you guys. I'll see you guys tomorrow at 9:30 in the morning. I appreciate you being here with me today. We'll catch up. You got my expectations for the rest of the week. Price target into Friday into Friday at minimum, 4:30. Into next week, 4:35. We'll look for a rejection above at 4:35 or even 4:30. So that 4:30, 4:35 is going to be very important to a bull to find out if we're heading higher or if we reject and trade down to that 4:14. If we wake up tomorrow morning and we're down to 4:14 in the open, I'm going to buy that shit too. The one thing I want to see that I'm looking for is a price rejection on the weekly and daily trigger. If we're going to crash, I want to see that rejection. I want that confirmation that we are going down, baby. This ship is going down. So I'll see you guys tomorrow at 9:30 in the morning. I appreciate all of you showing up today. Anybody that got the tool today, congratulations. Good luck with it in the coming days. Expect from me a post on Friday after we do the training session. Expect a post from me on Friday inside the Discord asking for your email addresses so that I can send you detailed questionnaires in the coming weeks. Have a great night.